Namaskar, myself Dr. Yogesh Singh, Assistant Professor in Commerce, GS College of Commerce, Varda. We are here for unit number 4, Joint Venture Accounts. Before starting this solution, let me tell you one thing that I have already provided you the PDF on Google Drive account of your class. The same thing I mentions in every lecture that before coming to this video or any video, you have to first refer the PDF file which is being uploaded on Google Drive account of your class. The link of that Google Drive account is shared in that description space of a WhatsApp group of your class. You just have to go to that description, click on that description link, you will get routed to the Google Drive account. You have to log in with your Gmail ID and the password that you had set up there, and there you will see the PDF that I shared with you of unit 1st to unit 4 having numericals. We generally follow the trend in the entire syllabus that we are actually what we can just having the solutions of this problem in the same sequence which I had provided you in that particular file. Today we are going to see the numericals of joint venture account, the unit number 4. We already finished unit 1st, unit 2nd and unit 3rd in last videos. In unit number 4 we are seeing the problems of joint venture account. This problem is also shared with you, but before starting with this problem, I'm just going to brief you something related to what is joint venture, what are the methods with the help of which we are going to solve these problems, and what we have to do while solving this problem. The first thing which is very important while sharing these problems, I already shared you the pro forma of these accounts also. Because look, when I'm writing here the joint venture account, joint venture account, then joint venture, joint bank account, then co-venturer accounts, it means that actually this pro forma is already being shared. That pro forma we have to follow that pro forma, because it will be very easy for us to follow that thing and solve our problems accordingly with that. So sharing, I have already shared that pro forma with you along with the numericals. So go to that numerical, go to that pro forma, and then come to this lecture and see what I am going to explain this problem with you. Now moving to what is joint venture account. Actually when two people or more than two people come together to do some type of venture, some type of job, some type of business or any type, it can be a trading business, it can be manufacturing business, it can be anything, but there is a need of at least two people or more than two people. The minimum requirement is only two people. When they come together, they will form a joint venture because they are working together for any kind of any type of business, trading activity like that. It means that when these two people come together, if they are doing some business, there is a need of recording the transactions, there is a need of preparing the account books, then there is a role of joint venture account. There are two types of that. One is a centralized, where actually we are keeping the data in a centralized manner like this. This problem is of a centralized method problem where first we pass the journal entries, and with the help of the journal entries we prepare joint venture account, joint bank account, and then co-venture accounts. In this particular problem we have two co-venturer, one is Raj, another is Mohan. So we had prepared their accounts also under the title co-venturer account. So in this particular type or in this particular method, what we are doing, this is a centralized type of method. What we are doing here, we are actually keeping the data at centralized level. They have some office, means if you're talking from the angle of the business, they are working from some office, they had the particular mechanism to record the transactions, to prepare the files, all these things they have in a place, and in that particular place they are preparing their files, they are preparing the transactions, they are recording their transactions. That thing is called as a centralized way of recording this type of joint venture accounts. Another method is a decentralization method. In decentralization method, actually it is a completely reverse of centralized method, where they haven't any office, they haven't that special mechanism to record the transactions, to prepare the files. In that case, what they generally do, they prepare their own accounts, and in their own accounts they are going to do the transactions. That thing is called as a decentralization method. The most important, the most popular method among these joint venture accounts is a centralized method that we had just wrote on this board. where we have to prepare the entire transactions, entire files at one location. That's why it is called as a centralized method. So I think in this first we had cleared some things about joint venture account, the basics of joint venture accounts, and what we have to prepare in this particular type of things. And now moving to the particular problem, first I will read that problem. The problem is already shared with you on Google Drive account, but again I am going to read that. While reading, one thing you have to keep in mind that I already shared with you the journal entries and proformas. That proforma you have to first read properly, go to and read that problem properly, and then go to that problem. The first problem that I already shared with you, I am going to read that. Along with the reading, I will explain the things what we have to do in this particular problem, and then we will move to the journal entries. And as you know that with the help of journal entries, then we will prepare the ledger accounts that we have to prepare in this way. First we have to prepare a venture account, bank account, and then co-venturers account. Mr. Raj and Mr. Mohan, these are two co-venturers in our this first problem, entered in a joint venture to make a documentary film for government of Maharashtra. They are in contract with government of Maharashtra some type of work, and that work is of documentary filming. We don't have to be, it is not important for us. Which agrees to pay rupees 2 lakh by check. Government is going to pay rupees 2 lakh to these two people. They opened a joint bank account. Actually, they have to open a joint bank account to do this transaction at centralized level. That's why these things will happen here. Wherein they deposited the following amounts. Mr. Raj rupees 20,000 and Mr. Mohan rupees 30,000. What they did before starting a business, there is a requirement of some capital, some amount, some working capital. So what they did, they deposited rupees 20,000 by Mr. Raj and rupees 30,000 by Mr. Mohan at their common bank joint bank account. They share profit and losses in the proportion of 1:3 and 2:3 respectively. It means that Mr. Raj will share profit or loss, whatever it is, loss or profit or loss. It will be in the range of 1:3, and for Mr. Mohan it will be 2:3. The following payments were made out through joint bank account. For running their business, for doing their trading activities, they will incur some expenses, and those expenses will be borne by these two people. They had given us a list in this particular problem. Purchases of equipments 12,000, higher charges of equipments 10,000. If they are not going to purchase it, they will take it on higher basis. So higher charges of equipments 10,000, wages 90,000, materials 20,000, office expenses 10,000. These are all the expenses which are being incurred for running this type of job, this type of activity. Going to the next thing, Mr. Raj paid rupees 4,000 other expenses. The film was completed, the work was completed, and the amount duly received. They received their entire amount from government of Maharashtra. At the end of venture, when this work is going to finish, Mr. Mohan took over unused materials. The material which remains unused, that is being taken over by Mr. Mohan at a valuation of rupees 6,000, and after that they settle their account. So this is a summary of this particular problem, and what we have to do here, we have to pass the journal entries, and then we have to prepare a joint venture account, the first one, then joint bank account, and then we have to prepare a respective co-venturer accounts in the form of Mr. Raj account and Mr. Mohan accounts. So this is the way we have to deal with this first problem. As I told you earlier that I already shared this pro forma with you in that Google Drive PDF file, but again we are going to see step by steps. The first one is what they did. They first introduced rupees 50,000 as a capital in the joint bank account, because this is going to be first transaction as they have to start their own business. So they first introduced a capital. So what will be the first journal entry? Joint bank account debit to Raj account and Mohan account. These are the simple journal entries. We just have to follow the rules and regulations of journal entries here. Mr. Raj brings 20,000, Mr. Mohan brings 30,000, so it will be 50,000. The description will be being cash introduced as capital and deposited into joint bank account. This is the first journal entry because they introduced capital in a joint bank account. After that, what happens? There are various payments which is going to be made from joint bank account. These payments we can pass separate journal entries for these payments, but better to save our time. What we did here, we just combined all these expenses at one place and pass only one journal entry. So 12,000 10,000, 90,000, 20,000 and 10,000. There are 5 expenses: purchase of equipments, higher charges of equipments, wages, materials and office expenses. All those expenses we club together, and the total of which is 1,42,000, being various payment made from joint bank account. So it will be joint venture account debit to joint bank account 1,42,000. So this is the second journal entry that we have to pass. One thing you should have to keep in mind that we have to follow the flow of problem. What is happening in that particular problem, same way we have to reflect that thing in our journal entries. That flow we have to follow. The third thing is that Mr. Raj paid rupees 4,000 other expenses. So joint venture account debit to Raj account, being other expenses paid by Mr. Raj of rupees 4,000. That thing happened in a problem, and we just reflect the same thing in our this journal entries. Then what happens? The film was completed and amount duly received. उसके बाद क्या हुआ कि काम खत्म हो गया, and they are actually in receipt of rupees 2 lakh. So joint bank account debit, because that amount is going to be credited in joint bank account. It is given by receipt from government of Maharashtra. So joint bank account debit to joint venture account rupees 2 lakh, as that task is being completed. Moving to the next thing. At the end of venture, Mr. Mohan took over unused material at a valuation of rupees 6,000 and settled their accounts. The things which is remained, the material which remains after finishing this task is actually taken over by Mr. Mohan at the valuation of rupees 6,000. So the journal entry will be Mohan account debit to joint venture account, being unused material took over by Mr. Mohan and which is valued at rupees 6,000. So actually it is very simple. What we have to do, we have to follow the same style, same structure, same methodology, what is being written in a particular problem. We have to follow the same things, and then after we have to transfer the profits to respective accounts. Joint venture account debit to Raj account and to Mohan account. We just have to balance the debit and credit side here, and then we will find that there is a difference of 60,000. So Raj account 20,000 and Mr. Mohan account 40,000, being profit on joint venture transferred to co-venturers account. And at the last, Raj account debit 44,000, Mohan account debit 64,000 to joint bank account 1,08,000, being amount paid to co-venturers as a final settlement. Why it is called as a final settlement? Because here we have to find out the difference between debit and credit values of that particular person, and then we will find out that 44,000 will be for Mr. Raj and 64,000 will be for Mr. Mohan. That thing you will keep, we will just find out when you will actually do a calculation of this thing in journal entries. Do a tracking of debit and credit values, and there you can find the difference of rupees 44,000 and 64,000. Total in these two sides will be 1,08,000. So the last journal entry will be of Raj account debit 44,000. Mohan account debit 64,000, and it is going to be final settlement to joint bank account 1,08,000, being amount paid to co-venturers as final settlement. One thing you should have to keep in mind in this type of problems, that the journal entry will be always end with final settlement. Because why it is called as a final settlement, as I mentioned earlier, that we have to settle it if it is a profit or loss, but we have to settle that transaction, because that settlement is going to be reflected in these ledger accounts also. So the 50% work is being completed, that we had already prepared the the journal entries. With the help of these journal entries, we have to first prepare a joint venture account, then we will move to the joint bank account, and then a Raj account and Mr. Mohan account. So joint venture account, I am just going to read the things because you know the rules and regulations of preparing ledger accounts from journal entries that you had already studied in class 11 and 12. So I am not going to be in depth of these rules and regulations, that how to prepare a ledger accounts from journal entries. Straightly I am reading the things. If it is something to there, I will explain the things. Joint bank account 1,42,000. Here you will find that joint venture account debit. So it will be joint bank account 1,42,000. Raj account 4,000. Again we have to move to here. Okay. Joint venture account debit. So first it will be Raj account 4,000. Then on this side, joint bank account of rupees 2 lakh. Here we will get that joint venture account credit. So we will write joint bank account of rupees 2 lakh, and Mohan account 6,000, Mohan account debit to joint venture account, so Mohan account of rupees 6,000. Difference of rupees 1,20,000 and that is of rupees 60,000 and is getting distributed as 1/3 and 2/3. 1/3 and 2/3 figures are being already provided in a problem. We have to share, we have to distribute the profit or losses here. Here it is a profit, so Raj account has 20,000 and Mohan account has 40,000. The joint venture account is get balanced at rupees 2,06,000. The second thing that we have to prepare in this particular sequence is a joint bank account. Again, we have to find where we will see the bank account. So here first, Raj account 20,000, Mohan account 30,000. Then again we have to trace where is a joint bank account here. Joint venture account debit 2 lakh. Now again we have to trace out joint bank account. Joint bank account, here you can see that joint bank account, joint venture account 1,42,000. Then again here we will be here Raj account 44,000 and Mohan account 64,000. These two things will get automatically balanced because these are the transactions from joint bank account and there will be automatic reconciliation there. If you find a difference at joint bank account, then maybe there are some mistakes in calculation of these journal entries or any ledger account. So you will get your answer, tracking of your answer. You can do that at your own level. If you see that if your joint bank account get automatically tallied, it means that your answer is correct and you are on a right way to solve that particular problem. So this joint bank account get tallied at 2,50,000. So after preparing joint venture account and joint bank account, we have to move to the co-venturer account. The first co-venturer account is Mr. Raj. We will start from joint bank account 44,000. Here you will see we will just have to track what are the transactions for Mr. Raj, and for Mr. Raj you will get here joint bank account of rupees 44,000, that is at the final settlement. Then joint bank account rupees 20,000, this one. Then of rupees 4,000, here also you will get a transaction of Mr. Raj, and joint venture account as a 20,000 of rupees profit here. This side also again get tallied. That is also actually what we can say a signal for us that our problem is right. Here Raj account get tallied at rupees 44,000. Same thing we have to apply for Mr. Mohan account. Joint bank account of rupees 6,000. We have to find out, we have to track whether Mr. Mohan account's transactions are there. Mohan account debit to joint venture account rupees 6,000. Then final settlement of Mr. Mohan account here 64,000. Then joint bank account means we have to find out his profit. Here you will get that 30,000 Mr. Mohan account, not the contribution of Mr. Mohan, and joint venture account profit of rupees 40,000. This also get tallied at rupees 70,000. So this is the entire scene of this joint venture account, where the most important thing is that we have to prepare a journal entries. If you prepare journal entries in a proper way and if there is no mistake in the calculation of the transaction of journal entries, then it will be very easy to prepare a ledger accounts, because in that case you just have to follow the rules and regulations of preparing journal entries and preparing the ledger accounts. So this is all about journal entries, joint venture account, joint bank account and co-venturer account. So I hope you understand this problem very well. The first thing you have to do, you have to just go to Google Drive account, read those what we can say journal entries properly, read that pro forma properly, and then come to this video and refer this video. Next lecture we will see another problem. Till then, thank you.